Today was just one of those days when you log into your portfolio, you look at how much money you're down, and you just want to go back to sleep. It just makes you regret being a stock market investor. It makes you question what you're doing this about. Look at this heat map. You see many different names, and these are some of the largest, most profitable companies in the world. This is the sectors for the S&P 500. This is the heat map, and there's so many wonderful, amazing companies in here, like Johnson & Johnson and Home Depot and Exxon Mobil and Honeywell and Visa, JP Morgan, United Healthcare. There's 500 names in here. And basically every single one of them, other than a couple exceptions like here we see Twitter, other than a couple of small names, you get the point, like 99% plus of these companies are down, and most of them are down 2, 3, 4, 5, 6% plus in the red. Some of the highest names being down even as high as much as say 7% for Amazon, and Meta even being down over 9% today, just in a single day. And we're going to go over in this video the reason why everything dropped. I'm sure you've probably already seen it already, but I just want to give a refresher, in my opinion, where we're at in the market. We're going to look at some individual stocks, some companies that I've selected that I just want to go over, and then of course we'll give my updates for my portfolio and where I'm at. If you haven't seen me before, my name is Jordan. I'm a millennial investor, and in every single video I like to give an update where I'm at with my portfolio as well as with my investments, and these are the three companies that I currently own in my growth portfolio, which is in order from largest to smallest, which is CRM, Salesforce, Amazon, AMZN, and then CROX stock, which is Crocs. I know, funny, Crocs, right? If you haven't seen my video on that, go ahead and check that out. And then we also have a dividend growth portfolio that we update every single week, which is currently holds about 21 different holdings in it, and that is updated down below in the description. So check that out if you haven't already, and also get signed up with M1 Finance, which gives you $10 for getting signed up now. 125 people have signed up for it so far, and check out the other stuff down below in the description, including credit card referrals, Yada savings accounts, and lots of good stuff. But without further ado, let's go ahead and get started. Oh, and I forgot to mention, this is my balance as of today and my year-to-date performance. So if you want to take a pause, look at that. That's how we're doing so far. And today alone, we're actually down about $3,500. You heard me right, $3,500. I'm actually not sure. This might be the biggest dollar amount I've ever been down. So today was not good at all for me or most investors out there. And let's go ahead and get started about talking about the reason why this happened. Well, CPI came out today. Now, this is the inflation rate for CPI looking over the last year or so, and we originally were having numbers of 5%, 6%, 7%, and then we even got all the way up to 9.1% just 2 months ago. Last month, it seems that we had finally peaked. We finally went down from 9.1 down to 8.5, and then as of this month, the number that just came out this morning dropped from 8.5 down to 8.3. That's awesome. That's good news, right? Well, it is good news, except there's one problem. The market was expecting that this would come in at around 8.1, and it came in at around 8.3. And then what did the indexes do? Well, let's take a look at this. Here's what the indexes responded with. This is the S&P 500, the Dow Jones, the NASDAQ, and the Russell 2000. So the S&P 500 went down 4.27%, the Dow Jones 3.95%, the QQQ NASDAQ went down 5.48%. I think that actually that might be the worst day of the year. I'll have to check. If it's not the worst day of the year, it's definitely close, top 3 for sure. But it's very rare you see down 5.5% on the NASDAQ in a single day. Russell 2000 down surprisingly the least of them all, 3.91%. But this is what their charts look like for the day. From the moment the market opened until the time it closed, it was just pretty much a straight line down. Now I want to go ahead and give an idea of what this looked like for other companies, because a lot of you guys don't invest in indexes. A lot of you invest in individual stocks like I do. And here's what big tech looked like. Amazon, which is my second largest holding, which is down 6.96% on the day. Apple, the largest company in the world, down 5.87%. Right behind it, coming in at number 2, the second largest company in the world, 5.5% down. Meta having an awful day, down 9.37%. And then lastly, we have Alphabet down 5.86%. But it wasn't just big tech. We especially see the pain even worse when we look into big growth stocks. You see Netflix down 7.77%. Nvidia down almost 10% on the day. Shopify 6%, and Snowflake 4%, Salesforce 4%. Now you might just be saying, okay, maybe it's just the growth stocks. If you know me and my portfolios that I shared down below in the description, I have a growth portfolio that I share and a dividend growth portfolio, which has very safe, conservative, defensive dividend stocks, which are supposed to provide cash flow in times of turmoil like this. Well, I pulled up some names here, and let's go ahead and take a look at them. Home Depot, one of the core positions of the portfolio, down 6.5%. Broadcom down 4.8%, Target down 4.3%, Pepsi down 3.7%, JP Morgan, the largest holding in the portfolio, down 3.5%. And I know that it's very easy to get scared. In times like this, it's easy to get worried. It makes you question your investments. It makes you consider selling out of the market. And I just have to say that it's times like this that makes millionaires. When you're buying these companies when they're at rock bottom valuations, this is when money is made. The example I always like to give, mostly because the numbers are most easily demonstrated because it's a subscription revenue company, is Salesforce, ticker symbol CRM. You see that every single quarter, time after time, this company continues to break its record every single 90 days that it reports its earnings, right? Originally, just saying, going back to 2020 when the pandemic started, doing about $5 billion in revenue every quarter, is now doing $7 billion. And this has continued to 2022 despite the recession. Okay, now it's profitability, doing the same thing. You see that it's free cash flow that it put up last quarter was the highest it's ever put up at $3.5 billion. Now, if you only looked at these business metrics and you only knew what the company was doing, a decreasing debt balance, right? Look at this going down. Look at this cash pile going up, right? You would think that this stock would be at all-time highs, probably roaring higher. Well, let's look at that. Let's go over to the research tab here, and let's type in ticker symbol CRM. If you look year to date, this company's down 35%. In a one-year timeline, this company's down 35%. This company has gone nowhere but down pretty much ever since its peak right around November of 2021. Almost a year straight of down day after down day. Despite this, the company continues to put up better and better metrics every single quarter, every single year. And so this is why I have Salesforce as my largest position. It's very easy to demonstrate this. Since it's a subscription revenue company that has growing record revenue every single quarter, you can demonstrate how easy this company grows despite its falling share price. Now, there are many, many other businesses in this heat map that you can see that are still wonderful growing businesses no matter what their stock prices are doing. And I think if you're seeing this, this is the time to not get scared, but to get excited about the potential opportunities that didn't exist before today that now exist today, and hopefully in the future if we continue to see more pain. Now, I don't know where the stock market's going to go in the future. It could go higher, it could go lower, but no matter what, if you're watching this video and if you're not retiring this year or next year, if you're watching this like me, I'm 23 years old, if you're watching this very early in your early investing and retirement career, then this should be the time that you should get excited and start throwing every single dollar you have into the stock market over time as we continue to probably go down. But regardless, invest in good companies, hold for the long term, and you're going to do just fine. Thank you guys so much for watching. Check out the stuff down below in the description if you didn't already. But without further ado, guys, my name is Jordan. I'm a Millennial Investor, and I'll catch you guys next time.